It's Friday, June 24th, 2022. A few things I want to talk about today. We'll start with this. Markets across the board. Dow Jones up 823 points. NASDAQ up 375 points. Yes, yes, yes. Everything's going to be okay. Everything's going to be fine. We need to ask ourselves, why the rally this week? What caused the rally, and is everything going to be okay? What was the good news? Where did we see some sort of economic comeback this week? Because I continue to read the data every day. I'm looking at statistics every day, and things continue to look worse. Yet we get this very, very nice rally today. Based on a bunch of nothing. Now, of course, you do have the Fed. Yes, the Fed buying these bonds. Again, we've talked about this from last week when Matt and Sid were on the show. We had the 10-year at 3.5%. Now today it's at 3.1%. Yesterday it was 3.08%. Who's buying up all these 10-year treasury bonds, ladies and gentlemen? You know exactly who is buying the debt and suppressing the bond market right now. And this has allowed things to rally back. It's taken some of the fear out of the market, in my opinion. And now we're going to get the suckers coming in, buying the dip. This is going to be really bad. And again, you have the Fed at one end raising rates, and we're looking at a 93% chance of a 75 basis point rate hike in July. At the same time, they're not tightening the balance sheet, they're expanding the balance sheet. They are buying up bonds, billions upon billions of dollars. So this is going to have, I think, a real negative effect on the economy for sure. As rates rise, it's going to kill off the economy. It's going to kill off the middle class. And it's going to allow more inflation to run hot as they are continuing to print money out of thin air. And we have this QE at the other end buying up the bond market and buying into the stock market. So, I mean, this is just more kicking the can down the road. But while you're doing it, you're destroying the economy. It's going to cost more to service debt. The average American is drowning in debt, drowning with this inflation. And yes, we're going to continue to raise rates, and it's going to do absolutely nothing because we are creating more inflation on the backside of this whole thing. This is, to me, absolutely criminal what is taking place. It really is. And I want to go through some of the data today and some of the stats here. And you tell me how things are going to get better. I do not see any light at the end of the tunnel here. Half of Americans didn't save during the health crisis, leaving no savings cushion amid recession fears. We're in a recession right now. National savings rate, as most of you know, is 4.4%. And we had people back during the health crisis getting all this free money, benefit checks, stimmies, and most people went out and spent it. They did not save it. And people are not prepared for what is happening right now. And this is just the beginning. We're going to look back and wish things were as good as 2022, ladies and gentlemen. Things are going to get worse. Here's an article that came out a while back on CNBC. Over half of Americans have less than 3 months worth of emergency savings. 3 months worth of emergency savings. They have less than 3 months of emergency savings. That's not emergency food. That's not emergency supplies. This is emergency savings. Again, this is very scary, very concerning that over half of Americans don't even have 3 months of savings, let alone they don't have 3 months of emergency supplies. They don't have 3 months of food. They don't have a mental mindset for what we are heading into. And you're going to need more than savings. You're going to need more than money for what is about to happen. And I don't know if it's going to happen next month, next year, 6 months from now, a year and a half from now. I don't know. I don't care. I'm preparing every day. This is a way of life for me now. This is a lifestyle, and it has to be for you too. There's so many people that just talk the big game. You should do this, you should do that, you should buy this, you should buy that. And they don't do any of this. They like to hit their chest, and they like to have all the answers, and a lot of people like to just make videos. Yet they are the most unprepared people I know. And unfortunately, we have too many people out there that have all the answers and are telling other people what to do when they're not even doing anything for themselves. They don't have a cash reserve, they don't have metals, they don't have emergency food, they're not walking the walk. There are too many people out there today not walking the walk, yet telling everybody else how they should prepare, how they should live, yet they don't walk the walk. Again, they are the most unprepared people out there. The hedge today, 4 million Americans priced out as home rents rise significantly. Home loan qualifications skyrocket. And we have Harvard University's annual State of the Nation's Housing Report right here. And it's very interesting. And I'm just going to paraphrase a little bit here. It says here a first-time buyer would have to shell out $27,400 or 7% of the sales price as a down payment in April on a medium-priced home. This rules out 92% of renters who only have a median of $1,500 in savings. This is shocking, and it is sad that I'm reading something like this, that this is the state of affairs with our economy right now. 92% of renters who only have a median of $1,500 in savings. Incredible. It's an incredible statistic. And yet people cannot see what is coming. And look, this is Harvard University's annual State of the Nation's Housing Report. This is what they found. Let me repeat this. A first-time buyer would have to shell out $27,400 or 7% of the sale price as a down payment in April on a medium-priced home. This rules out 92% of renters who only have a median of $1,500 in savings. Dow Jones up today, S&P, NASDAQ, Russell 2000, they're all up today. And of course, the cheerleaders on the television today, all out there telling everybody to get back into these markets, go buy a house, run up the credit cards, go out and spend, go out and buy stuff. Look at the condition of the average American right now. Something is very wrong. How in the world can the stock market be way up here today and rally this week when you look at the condition of the average American? If the average American cannot go out and shop, cannot go out and rent an apartment or buy a house or buy a car or pay their credit card payment, we got big trouble. Something is very, very wrong here. Cost of insulin driving 80% of diabetic Americans into debt. Another survey. The survey done by Charity RX found 80% of respondents said insulin cost had created financial difficulty. 80% of the surveyed said that they had to take on credit card debt to afford the drug. The average diabetic took on $9,000 of debt to cover these costs, and some are skipping their dosages because they just can't afford the drug. And just imagine how many people are dependent on pharmaceuticals, heart medication, blood thinners, you name it, and they cannot afford their drugs. They cannot afford these pharmaceuticals. They're skipping dosages. They're going deeper into debt. And we've talked about this many times, as Sid and I have been out many times talking to the homeless, feeding the homeless. Many of them reiterated the same story with us time and time again, that medical bills put them out on the streets. Medical bills cause them to lose their home. Medical bills cost them their life. They're now homeless, living on the streets. And you read stuff like this and how bad it's getting, and you think about pharmaceuticals and where they come from, other countries, mainly Asia. If we had some sort of disagreement with a country who supplied us our pharmaceuticals, because 90% of the pharmaceuticals in America come from other countries, what if we had some dispute and we got cut off? What if for some reason a country had to shut down, couldn't make those pharmaceuticals, and in return couldn't ship those pharmaceuticals here to the States, what would happen to millions of people? And look, I know that there are people out there that need these pharmaceuticals, need these drugs just to function day to day, to live. I understand that. But there are a lot of people out there right now that could get off pharmaceuticals if they cleaned up their lifestyle, if they ate better, if they got some exercise. How about prevention? How about never ever having to rely on pharmaceuticals? How about prevention? How about right now just getting in better shape, living a cleaner lifestyle, eating cleaner, working out, and just taking pride in your body, in your temple, and just taking care of it? I think prevention would really save a lot of people, a lot of heartache, a lot of pain, and a lot of money, because they would not rely on these drugs. And you don't, the less you rely on something, the less crutches you have in your life, the better. Again, I mean, this is absolutely bankrupting people. It's going to put people on the streets. It already has. It's going to continue. And again, my heart goes out to people who need these pharmaceuticals but can't afford them. And the only thing I can say is, if you're watching this and you're not on pharmaceuticals right now, you're not dependent on them, you don't need them, do whatever you can to never ever be dependent on them. Get in better shape, eat better, live better, work out, do what you have to do. Here's another one. Inflation causing more Americans to be nervous about their savings. 42% feel comfortable with their savings, while 58% do not feel comfortable about their savings. And out of that 58% in this article on The Hedge, half of those people, 75% of that 58% have no savings whatsoever. Rapidly rising inflation rates are causing huge problems across the country now, across the globe. It's affecting most households now. And most people, unfortunately, have very little or no money whatsoever saved up, as inflation is going to continue to rise and run out of control. And it's forcing more and more people right here in the U.S. to dip into their savings. 63% of U.S. households have cut back on consumer spending. How in the world can the markets be up today when 63% of U.S. households are cutting back on spending? 57% spent less on groceries. 44% are reducing gas expenditures. 35% are making fewer debt payments, which puts people further into debt. Yet markets up today. Do you understand this? I mean, something is wrong. Somebody's lying here. There's no way that we can have food shortages, chip shortages, 37 million chickens euthanized, 10,000 cattle dead in Kansas, water shortages, the weekly jobless claims continue to go up, more and more layoffs coming. How in the world are the markets continuing to go up? Nearly 6% now on a 30-year fixed mortgage rate. I don't get it. The Hedge. The Great Purge is pushing small truckers out of business at an unprecedented rate. More problems. And who's it affecting? It's affecting the small companies. It's affecting the owner-operators. The little guy. That's who it's really affecting. It is now 51% more expensive to run a trucking company in 2022 than it was in 2021. Diesel prices. Equipment prices exploding. Prices of repairs also going up. Everything's going up. Record inflation. Big box retailers already are full of inventory, and consumer spending down. All this affecting trucking. And you remember, what was it, 6 months ago, 12 months ago, they were begging for truck drivers. We need millions of truck drivers. We need everybody to be a truck driver. We need truck drivers, truck drivers, truck drivers. Well, guess what? Now, all the big box retailers are full of inventory. They don't know what to do with it. They're going to have to blow it out with major sales. People are spending less. The cost of diesel is eating up profits. And it's going to be the little guy, as always, who pays the price here. And we're going to see more trucking companies going out of business, unfortunately. So I want to change the topic here a little bit. And I want to just talk about the minimum wage average in America. It's $7.25. And I broke that down to a 40-hour work week, which came to $290 per week, $15,080 per year. And the average rent in America is $1,326. And they say that you shouldn't spend more than 30% of your income on rent or mortgage. And I'm thinking, you look at the average minimum wage in America, and millions of people depend on this as a full-time job. Like, they make minimum wage, and it might be in retail, it might be in the restaurant industry, it might be in agriculture, whatever it may be. The average minimum wage in the US is $7.25, and this is what millions of people rely on, while rent on average is $1,326 per month. How in the world are people surviving? I don't get it. Yes, you can come to California and make $15 an hour, but you can pay $3,000 or $4,000 for an apartment, and you can pay $6, $7, or $8 for a gallon of gas. And you have the national gas average is, I think, $4.96 right now, so basically $5. How in the world are people doing it? Yet markets are up today. We're being told that we may just skip the recession. There may be no recession. We are in a recession, ladies and gentlemen, and millions of people are suffering right now, and more are coming. I can't even imagine how many people are going to go homeless. They're going to go hungry. Going to be a lot of people moving back home with their folks. A lot of people getting roommates. Things are about to change. And to confirm some of that, I looked at the U.S. national debt clock today, and you can Google that. It's a very interesting website. But the U.S. national debt today is approaching $31 trillion. We're at $30.5 trillion. Debt per taxpayer. Debt per taxpayer. If you have a job and you're paying taxes today, you owe $243,000 to pay down this debt. That's what the average taxpayer owes right now. Because we got a lot of debt, going on $31 trillion, and you got to pay it, and you got to pay for it. U.S. federal budget deficit, $1.74 trillion. Fed debt to GDP, 129.5%. Back in 2000, it was 57.4%. We have a very, very dangerous spending problem here, ladies and gentlemen. This country cannot stop spending. We are borrowing money, we are printing money, we are spending money, and we are in big trouble. Student loan debt now, $1.765 trillion. That comes out to $39.9 thousand per student. Credit card debt now, $1.135 trillion. That comes out to $6,907 per cardholder. Median income in America, $35,900, while the median home in America is $403.9 thousand. We have 40.1 million people living in poverty here in America, but we just cut another $450 million to Ukraine. Yet we have over 40 million people in poverty. Food stamps, we have 39.6 million people here on food stamps. U.S. debt held by foreign countries, $7.748 trillion. Trade deficit, the trade deficit, $1.178 trillion. That's incredible. And that tells me that we're not making much here in America. U.S. trade deficit with China, $386.6 billion. We are definitely losing, no doubt about it. U.S. imported oil. What do we spend on importing oil? How about $365 billion? How about U.S. unfunded liabilities? Now $170 trillion. 99.3 million people not in the labor force. Manufacturing jobs in America, we have 12.7 million manufacturing jobs right here in America. And that doesn't even sound like a whole lot, does it? It really isn't. Back in 2000, we had 17.1 million manufacturing jobs. So think about that. Just over a 20-year span, nearly 5 million manufacturing jobs gone, and tens and tens and tens of millions of manufacturing jobs lost the decade before that. Really a sad state of affairs as I come to you on this 112-degree Friday here in Palm Desert, California. When I watch what we just watched today, Dow Jones up 823 points, this fantastic rally that they're calling it, NASDAQ up 375. You have to ask yourself today, what caused it, what fueled it? Absolutely nothing but the Fed. And this is really dangerous because as I leave you today on this weekend, I really want to give you some food for thought. I want you to think about a few things, and most of all, I want you to prepare. You have got to be walking the walk. You've got to really just be living this day to day. It's now a lifestyle, and that's it. But when you see, again, what they did today, the magic tricks and the manipulation today, and how they're going to get people to feel complacent and that, hey, the water's safe, come on in, even though there's a large shark lurking, beneath. But no, everything's safe now. There's no danger. Come back in. Look, everything's rallying. It's going to be fine. 10 years going back down. The Dow and NASDAQ are coming back up, and all your friends are buying the dip. So everything's going to be okay. Let me tell you, there is a large shark out there lurking, and it has not gone away. And if you think that we're going to avoid a recession, you're 100% wrong. If you think we're going to avoid a real estate collapse, you're 100% wrong. We are in recession right now. In fact, we are, I think, possibly, arguably in a depression at this point. If you look at the stats from the last Great Depression to where we're at right now, with inflation, people not in the labor force, the real unemployment numbers, manufacturing numbers, debt, etc., you could argue that we're in a depression right now, yet the markets are going up. I mean, come on. I mean, they really think people are this dumb. And I guess a lot of people are drinking the Kool-Aid, and they are gullible, and they are naive. And they're going to get bamboozled to jump back into these markets, back into the Ponzi schemes. We'll see how it all plays out. But something is very, very wrong, and something is going to break. And I think for the most part of this year, you began to see things break. You began to see the cracks forming. And if you think it's all going to go away, again, I think you're wrong. I hope I'm wrong. I really do. I really hope that we can buy more time. I hope that we never go into a recession or a depression. I hope it's all avoidable. But there's no way, looking at the data, looking at these statistics, looking at the condition of the real economy, the condition of the real consumer, there's no way we are going to avoid a catastrophic meltdown in this economy, in the markets, in housing, in bonds, in stocks. 100% unavoidable at this point. There's too much debt. There's been too much deceit. There's too much inflation now. They're losing control, and they're lying to you. And too many people believe that the people and the entities that caused this mess can fix this mess. Not going to happen. This weekend, get out there and prepare. Make sure you stock up on food, water, medical supplies. Make sure you're getting in better physical shape. Make sure that you get your security house in order. Get your security situated, ladies and gentlemen. We are seeing so much crime right now, so much chaos on the streets of America right now. I can't even believe what I'm watching day to day, when I'm watching videos, I'm watching the news with the amount of crime and the type of crime that is taking place. And we still have food. The markets haven't crashed yet. What is this all going to look like? You really need to think about this weekend. Really think about when the markets crash, when the food shortages really begin, when you go to a store and there is no food, when the pensions begin to break apart, when we begin to see big defaults here in America, what do you think the crime is going to look like? What do you think crime is going to look like here in America? I mean, this right now, we're seeing some unbelievable crime taking place in just literally every city, a surge in crime. It's going to look like a Sunday school picnic compared to what's going to happen. Imagine if there was a cyber attack. Imagine if a grid went down, what your city would look like. Imagine that. If it looks this bad right now, I can't even entertain what this would look like. I can't even comprehend it. But yet there's people out there that just believe that the people that caused all this, they're going to fix it. It's all going to go away. Well, I hope they're right, but I don't believe that they are, and that's why I will continue to prepare. That's why you will continue to prepare. This is why we're going to continue to work on security, and we're going to be prepared every which way we can. We're going to get in better physical, mental, spiritual, and financial shape. I think the time where people can just sit out now on the patio and drink a lemonade, I don't think we have that luxury now because we're running out of time. If you have kids, you have a fiduciary duty to make sure that your kids are going to be safe and sound financially, physically, and spiritually. So I think now more than ever, we got to be cutting things out of our lives. For us, for our families, we've got to be cutting things out because time is of the essence. We don't have the luxuries that we did a couple years ago, or 10 years ago, or 20 years ago. They're gone. Time is running out, and I'm not here to, freak you out. I'm not here to scare you, but I am here to alert you, and you should be getting scared now because what we're watching, like what we just watched play out in these markets today, not normal. This is completely fraudulent and criminal what we're watching take place, and it's going to get a lot of people really, really hurt. So I'm not here to freak you out, but I'm here to alert you, and you should be scared. And you should be taking action right now. If not for yourself, do it for your family, do it for your kids. Wake up, get ready, get prepared. God bless.